how many of those bills are going to have to be refinanced in addition to deficits of a couple $1 trillion as far as the eye can see. The current administration says, yeah, we've cut the deficit from 6.5% to GDP to 5.9% of GDP, yet it's still $2 trillion. National debt now is flown through 38 trillion, is now sitting at 38.2 trillion as of last week.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, we are in mid-November. Year is rapidly coming to a close. Dennis Tubbergen is with us. And now, Dennis, great to have you back on. So we're approaching the end of the year. When you look back, what do you think this year is going to be known for? What will we, if we even think about 2025, besides the fact that it's a round number, what do you think the biggest things this year were?
What a good question. Well, thank you for having me on, Kerry. Always a pleasure to catch up with you. I think that this will be known, the old saying is hindsight is 2020. So when we look back at this year, I think that we're going to see that this was the year that the devaluation of fiat currency really accelerated. I think that when you look at what gold has done, what silver has done this year, that's not a reflection of those metals being worth inherently more. You can't make more rings out of an ounce of gold today than you could 20 years ago. So I think that's very indicative of how quickly fiat currencies are being devalued. And I think when you look at the numbers, that is a trend that is likely going to accelerate. So I think 2025, looking back in time, I think it might be known as the tipping point as far as fiat currencies are concerned.
So interestingly, I was analyzing this really in depth. And, we're both going to Martin Armstrong's conference, the World Economic Conference in Orlando. It's this week from the 21st to the 23rd. I urge any of you out there who got the money and the ability to get to Orlando to go there. What Martin has said, and why he's been right and everybody else has been wrong, is he says the dollar, it isn't just a currency unit. It's a system. It's a system of control, a system of financial management, and basically there is no substitute for it at this point. And the BRICS are like a nice distraction, but the BRICS will never be a substitution for the dollar, for the simple reason that it's not a question of value. Yes, gold has value, always has value. We're both into it. It's a question of a system that functions to basically enable trade to occur on a global basis and for debts to be calculated and paid, for lack of a better term. I mean, what's your thought on that?
Well, I think that I would agree certainly that the dollar and the SWIFT system is where most global trade takes place. I think that though a couple developments that maybe to play devil's advocate for a little bit, I think a couple of developments that have happened. One, as of I believe August of this year, the number one reserve asset as far as central banks are concerned around the globe is now gold, no longer the U.S. dollar. So I think the move away from the dollar is unmistakable. I mean, it's irrefutable. Yet, to use an analogy that many people have used before, the dollar is still the best house in a bad neighborhood. So I think that you're seeing BRICS, you're seeing countries work around the dollar, not entirely because the dollar is being devalued, but when you look at what the United States did when they confiscated Russian assets or froze Russian assets that were denominated in dollars, I think it made the rest of the world say, well, wait a minute, if they can do it to them, they can do it to us too. We need to have a plan B. And I think at this point, there are a lot of plan Bs out there. I would agree. None of them are ready to displace the dollar as the reserve currency. But you're seeing gold, you're seeing silver. I think this whole development of the Genius Act, where we have stable coins now that have to be backed 100% by U.S. Treasuries if you're issuing your own currency. I think that's a move for the United States to create another market for U.S. Treasuries. So I think that shows some level of desperation. I don't think the dollar's ready to be displaced anytime soon. But as I said, I think that 2025 may be viewed as the tipping point. And I think at some point, you're going to see the rest of the world say, well, wait a minute, we need to go back to a tangible backed currency, a commodity backed currency. And I think that you're going to see that.
Yeah, I agree. But these things take time, right? It doesn't just happen. And that's why all of the dollar is going to fail and all that. Sure, they're right. Eventually the system is going to collapse. The debt, it's unsustainable, but it's not going to happen like according to anybody's timetable. It's going to happen kind of when it happens, right?
Yeah, I mean, there's an old cliche that the what is easier to predict than the when, and I think that's certainly true here. But when you look at last week, the U.S. Treasury bond auction that took place, Wolf Richter just wrote a piece on this, and I think that there were $694 billion of bonds, notes, and bills sold, with over $500 billion of them sold with maturities of 52 weeks or less. So in that respect, when the United States has to go out and finance their debt, they're looking a lot like the payday loan business. We'll loan you money for 4 weeks, we'll loan you money for 52 weeks. But that's going to create this whole debt refinancing snowball that's going to create a big problem. So in a year, how many of those bills are going to have to be refinanced in addition to deficits of a couple $1 trillion as far as the eye can see? The current administration says, yeah, we've cut the deficit from 6.5% to GDP to 5.9% of GDP, yet it's still $2 trillion. National debt now is flown through 38 trillion, is now sitting at 38.2 trillion as of last week.
Yeah. So what's your thought about tariffs? I mean, like Trump touts them like they're the key to salvation of the country. And I just don't see it that way.
Yeah, I agree with you. I mean, look, I think Trump has a point that, one, we don't manufacture things here anymore. And I think getting investment in the United States to create jobs, and if there's $17 trillion in an investment, that will be a huge boost to GDP. So I think in that sense, he is right. The problem is you don't build plants, you don't make that shift overnight. And certainly we've allowed the trade scales to be tipped not in our favor. We've allowed other countries to have access to the best market in the world without paying an appropriate toll. So I think Trump's right about that. But to say that we can run the country on tariff revenue, I think is ridiculous. When you look at the numbers, what are we at? $300 billion potentially in tariff revenue this year?
Yeah.
With a $2 trillion deficit. That's like using a garden hose on a forest fire. I mean, it might make an impact for a minute, but you're going to lose the war. So I just don't see that as being a solution to the problem.
Yeah, well, that's his story, and he's sticking to it, right?
So, I think, Kerry, too. I mean, you look at this idea now of a tariff dividend, where all but the highest earners in the U.S. might get a check for a couple $1,000s. That's just another way of saying we're going to drop some more stimulus because we don't like what the economy's doing.
Yeah, it's. I wish they would just be honest about what they're doing here, Dennis.
No, exactly. I mean, okay, a tariff dividend. Whatever you call it, it's stimulus.
Yeah, it's pump priming, right? It's printing money. And one of the things Martin Armstrong says is that lower interest rates are actually a bad sign for the economy because it means the demand for capital isn't there. And, I think he's got a point there.
Well, and look at what Trump proposed just recently, and it was confirmed by Bill Pulte. The fact that now they're looking at putting together a 50-year home mortgage. That just screams desperation as to let's get this housing market going again.
And what about the Trump's idea of printing a $500 bill?
Yeah, I think a $500 bill may become a necessity if we continue to devalue. I mean, we might. Why stop there? We might.
Well,
Maybe we should resurrect the $10,000 bill. I think that had Woodrow Wilson.
Hey, like basically, like the Zimbabwe, $100 trillion banknote there, right?
I had the same note framed in my office.
Yeah, right. So if that's the solution, then it's really a pretty easy solution, painless, right?
Absolutely. And isn't it Zimbabwe that had signs on the porta-johns not to use Zimbabwean notes as toilet paper because it clogged the systems?
I never heard that, but I believed it to be so.
I have a picture somewhere of that very sign.
I love it. Well, that's the turn of the wheelbarrow full of marks during the German hyperinflation, and the guy went in to see if they would take the marks, and when he came out, he found the marks on the ground, and the wheelbarrow was stolen. Right?
Yeah, this is what's the old saying? Same song, different verse. You go back to the Roman Empire, to Weimar Germany, to John Law's France in the early 1700s. I mean, there is one historical instance after another that we've seen this cycle of currency creation followed by a prosperity illusion, followed by painful inflation, followed by deflation in real terms. This is nothing new.
No, there's nothing new under the sun, as Virgil said, and that was said 2,000 years ago. So the question is, now, are we all reduced to just buying gold and silver and Bitcoin, or what?
Well, I certainly think that that's probably a pretty good idea for, a good share of your portfolio. When you look at U.S. government finances, just transfer payments now have hit $5 trillion annually. So that's Medicare, Medicaid, Social Security, SNAP, and unemployment benefits. 4.99 trillion was the last number that I saw. Interest on the debt is 1.2 trillion. So that's $6.2 trillion. And Kerry, I grew up when I learned math from flashcards and wooden rulers in school. So I'm giving away my age a little bit here, but that's a $900 billion deficit before we ever get to spending money on the military and everything else the government spends money on. This cannot be fixed. So devaluation has to continue. So, yeah, I think tangible assets are certainly something that every viewer or listener should be considering very seriously.
Yeah, so what do you buy? Gold, silver, both, Bitcoin? What do you do?
I have been, just true confessions here. I was late to the crypto party. I have been more of a gold and silver advocate. I would still say that I'm more of a gold and silver advocate. At the beginning of this year, I recommended to clients that they weight heavily towards silver just because the gold-silver ratio got to 114. It was an all-time high, so that was a kind of a no-brainer recommendation. Now that we have the gold-silver ratio back around 80, I'm a bit more of an advocate of an equal weighting. I think you want to own some gold, and I think you want to own some silver. And I think, by all research that I have done, I think this party's just getting started. I think they go much higher.
Couldn't agree with you more. Could not agree with you more. But one of the things Martin Armstrong said is the stock market's going to keep going up. He's saying Dow 62,000, 65,000 by 2032. And that's when he kind of sees the great changes taking place here. What are you thinking?
Well, first of all, whenever I get a chance to talk to Martin Armstrong, which is not as frequently as you, I ask questions and take notes. So I certainly wouldn't guess Martin Armstrong. I would say, though, that stocks will be higher in nominal terms, probably not real terms. So let me just give an example. If we go back to gold as being money for most of history, I have an example that I use in one of the talks that I give, that if you go back to 2000, 25 years ago, the S&P 500 divided by the price of gold per ounce was about 5. The S&P 500 was about 2,700. Gold was a little over $500 an ounce. So if you take 2,700 divided by 500, it's a little more than 5 ounces of gold to buy the S&P 500. Today, you've got the S&P at about 66, 67, 6,800. Gold's at 4,000. Now you can buy the entire S&P 500 for 1.5 ounces of gold. So in real terms, stocks are down. In nominal terms, priced in U.S. dollars, stocks are up. So I think, again, we're seeing deflation currently in real terms. But in nominal terms, yeah, I think Martin's probably right. In fact, depending on how much the dollar is devalued, I think it could go much, much higher.
Yeah. So, and he's been right all along, too. This isn't like a new forecast. It's in this book that I just wrote, the Armstrong Economic Code. Looking
well. And Kerry, let me congratulate you on having a #1 Amazon bestseller there.
I appreciate that, Dennis. And yeah, it's a real charge, and I feel like I'm doing something useful, passing through Martin's words through not a filter, but a mirror, an amplifier, so the average person can understand what he's saying, because I think it's really important, especially based on what we've been talking about, that you understand the gravity of the situation and the trends where it's inevitably all heading. So you got a book coming out pretty soon yourself, right?
Yeah, it's called Portfolio Playbook, and it's investing strategies for the current economy. I think that the theme of the book is that you really don't want to buy and hold in this environment. There are many advisors that are, I call them Wall Street advisors, that advocate a 60-40 portfolio, 60% in stocks, 40% in bonds. And I think that investors moving ahead are going to have to take more of a targeted approach to be effective. I think a broad market approach will fail people. Just, we started this conversation by talking about 2025. What will it be known for? The other thing I think it'll be known for is the year that AI drove the market, the stock market. This has not been a broad stock market rally. 60 to 80% of this upside, depending on how you want to measure it, in this market, 60 to 80% of the rally, I should say, is attributed to AI stocks. So I think we've got a big AI bubble here. I think AI is a technology that's going to be here for a long time, just like .com was. I'm old enough to remember 1999 and 2000. I'm old enough to remember when Pets.com was a company that is no more. And I think we're going to see AI companies. I mean, take a look at OpenAI. Sarah Fryer, the CFO, and within the last couple of weeks came out and said directly and then indirectly that the government may have to backstop the loans that they need to pull from investors to continue to keep that company viable. Here's a company with $13 billion in revenues and $1.4 trillion in commitments. The math does not work.
So you think they're trying to say they're too big to fail?
I think that's exactly what they're trying to get across. And Sam Altman, the CEO, came out and said that, however government wants to be involved, that's up to government. But he didn't poo-poo the idea of, government guarantees. And there's this whole concern by many in that community that we have to, win the AI race with China. So I think that that's probably a story we're going to see continue to develop and continue to rear its head as time goes on.
This is exactly like Sputnik. There was never a space race with Russia. It was strictly in the minds. It was a psyop, It was just one big psyop. Same exact thing here with AI. I'm not buying any of this AI space race nonsense. Been fooled once. I'm not getting fooled again, Dennis.
It's an interesting perspective I hadn't thought about, but I would agree with that.
Yeah, because it's already been won. The whole government is being run by AI now, not where I call it Trump GPT. It's not like Trump just says, what's the AI say and does it? No, it's what happens is they actually war game every situation through the AI and try to get a broader perspective and a better strategy. And in a lot of respects, it's worked. The only thing they haven't been able to figure out what to do, what Trump GPT is kind of lost at, is the deficit. Nobody knows what to do with that. But, I wrote a little satire that the bureaucrats and the unions, their last bastion to protect their government-granted monopolies, they're using Kafka GPT, which has been trained on 100 years of DMV customer service loops and and strikes and all that. But basically, they've lost, and we're just going to have to get used to it. The last remaining place where AI really hasn't grabbed hold yet that we can see is the legal system.
Yeah, I mean, I think that day is coming. I mean, when you look at a lot of, look at what Amazon just came out and said. I mean, they're anticipating by 2033 up to 600,000 job cuts. That's crazy. Look at the job cuts we've already seen this year as a result of AI. So hopefully it's like the Industrial Revolution. We make advances in one area and it creates higher paying, higher skilled jobs in another area, but I'm not convinced, and I'm certainly not an expert in that area.
I don't believe it's at all possible. I do agree with you, like 30,000 less jobs in Amazon. I think that's directly attributable to AI, all these other tech platforms, and it's only the beginning. A company like Alphabet, Google, is run by AI, literally.
Yeah, and Microsoft, and I mean, I know people at all these companies, and AI is playing a bigger and bigger role in the day-to-day management and administration of the company.
Totally. All right, Dennis, appreciate your comment on. Best place to find you is still DennisTubbergen.com, right?
Perfect.
All right, and that's Dennis, DennisTubbergen.com. The link's in the show notes to this interview on financialsurvivalnetwork.com. Appreciate your coming by. We'll see you up in Orlando, and safe travels.
Thanks for having me, and I will look forward to catching up with you in Orlando. Take care.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.